want to take a look at this strategy here where what we can do is actually make money on the downturn. So we have this here where I think what would make sense, like what I would like to do is I would like to, and I've actually thought about a strategy like this for a while now, where we can own a leveraged asset, something that does very well. So I'm thinking about a strategy that I think this will work very well in a market downturn. And again, not investment advice, but what I think would work well is if we own TQQQ, which is a very well-performing asset in most situations, but does not do very well on downturns. And then we add on a put spread. So make a strategy that owns TQQQ in most situations. Actually, no, only owns TQQQ if it's above the 200-day moving average. One of my favorite strategies is owning TQQQ if we're above the 200-day moving average. I like that by itself. But what we could also do is have this thing always own a put spread. So what I'm going to do is I'm going to take the research that ChatGPT did, and then I'm going to put that into a strategy. And I think we can create a strategy where we own TQQQ, but only own it if it's above the 200-day moving average, and then also always own put spreads, right? So we'll leave like some percentage of the account in put spreads on a regular basis. So basically, we're going to have 90% of our money inside of TQQQ on a regular basis, but only if it's above the 200-day moving average. And then we're going to take 5% of the account and buy this put spread so we actually make money on the way down. I think that's going to be really interesting. We do 90. Okay, so we use 90% of the account to buy TQQQ, but only if it's above the 200-day moving average. And then we're going to take 5% of our account and we're going to put into a put spread that's going to be rolling on a regular basis. So TQQQ should make us a lot of money when the stock market's going up. It's one of the best, like it's an incredible ETF. If you look over a long time period, it's up 24,000% since it started. The problem with TQQQ is that it does get hit pretty hard in downturns. So when things fall, it does get hit pretty hard. That's why we do this 200-day moving average. Again, not financial advice here. But if we own TQQQ, we can make a lot of money on the way up. And then if we hit below the 200-day moving average, we exit so that we prevent big losses with that. And then on top of that, now we're going to own this put spread that could potentially even make us money on the way down, which I think is pretty damn interesting.